Can you all hear me? Can you all hear me? Can you all hear me? Confirm you can hear me. Good morning, good afternoon, good evening. Confirm you can hear me loud and clear. You're welcome to today's live stream. You're welcome. You're welcome. How has been trading this week? I hope it's been profitable. You are welcome. You are welcome. My week has been good so far. It's been good so far. It's been good so far. How has it been at your end? I hope it's been profitable. Tuesday was profitable. Yesterday, I took some losses, and today is going well. Today is going well. In total, I'm in profit. In total, I'm in profit. How is it at your end? How is it at your end? If you can hear me loud and clear, please drop a comment. Drop a comment if you can hear me loud and clear. If you have any question, drop it in the comment section. If there's any pair you would want me to analyze, let me know in the comment section. You are welcome. You are welcome. So we'll start by looking at the fundamentals for today. Today is Thursday, October 16th, and we have four major news: two from Australia, one from Great Britain, and one from Canada. As you can see, employment change, Australia employment change, and unemployment rate was released today. That was at the early hours of the day for those in Nigeria, 1:30 a.m. And as you can see, both news came out negative for Australia. It means Australian dollar, there's a high probability that Australian dollar would be weak today. There is a high probability that the Australian dollar will be weak today. Good morning, Mayor Venture. Good morning, Mr. Raphael. Good morning, Mr. Atonda. Good morning, Olaitan. Okay, and by 7 a.m., okay, GDP for Great Britain was released by 7 a.m. No wonder there was a high volatility on GBP pairs. 7 a.m. Nigerian time. No wonder there was a high. Wow, that was the reason for the high volatility. Though I checked the calendar yesterday, but I forgot that Great Britain will be releasing its GDP data today. No wonder, no wonder, no wonder, no wonder GDP is gaining value. No wonder. Okay. And by 6:30 p.m. Nigerian time, Bank of Canada Governor Mark Lem will be speaking by 6:30 p.m. Nigerian time. But as you can see here on GDP, the forecast and the actual is the same. Forecast and the actual is the same. I still believe the GBP will be weak today. I still believe GBP will be weak today. That's my bias for GBP. I am bearish on GBP. I want to sell GBP today. I want to sell GBP today. Okay. So that's it for fundamentals. So let's go straight to the chart. So as you can see, yen is bearish. Yen is bearish. I shared this with you guys yesterday, but as you can see, what played out today, they came for the liquidity residing at this previous high, and yen has been bearish. Let's start with the daily time frame. Let's see how yesterday candle closed. Okay, so yesterday candle, what happened yesterday? They swept the liquidity that was residing at this previous high. They swept the liquidity that was residing at this previous high yesterday, and after the close of yesterday candle, the high of yesterday candle became an area of liquidity, right? The high of yesterday candle became an area of liquidity. If you go down to 4 hour after the formation of this candle yesterday, I'm sure you would be able to identify a bearish reversal pattern on lower time frame. Let's say 4 hour and 1 hour time frame. So you can see what we had on 1 hour on 4 hour time frame. Can you see what we had on 4 hour time frame? We had a bearish reversal pattern. The last candle yesterday closed as a shooting star. You can see that. And at this point, we had a shooting star. We had a doji. We had a doji. We had a shooting star. Now, the normal retail traders have executed sell after the formation of these patterns. The normal retail traders have executed sell, and their stop losses will be residing at this relative equal highs and also the high of this candle. So what they did this morning was to sweep the liquidity residing at this previous high. Now they've swept liquidity. Let's see on lower time frame, we should be able to identify a shift in market structure on a lower time frame. Okay, so you can see on a lower time frame right now, shift in market structure has occurred. First thing they did was to sweep liquidity, and you can see now there's a shift in market structure. You can see the market has shifted, means it has changed its trend from bullish to bearish. Now, after a sweep of liquidity, price is expected to pull back to a premium area. Okay, price is expected to pull back to a premium area. So you might be considering selling yen from this zone. You can see this fair value gap we have at the premium area. That will be a very good area to consider selling. And if you are selling, there's a high probability yen will come sweep this liquidity. This liquidity residing at this equal lows. There's a high probability yen is coming for this low. Let me go back to 4 hour. Okay, so it's likely coming for this liquidity. Okay, so that should be your target. Now, if you have not entered, if you are not selling yen at the moment, you could patiently wait for price to pull back to this zone. Okay, now if you don't want to wait for price to pull back to this zone, you could split your risk. Okay, you could risk 50% of your daily drawdown, taking the trade from the current market price. And if price pulls back to this zone, you risk the remaining 50% of your daily drawdown, because the price will pull back to this zone is a probability, is not guaranteed. Okay, it's not guaranteed. So you could risk 50% from the current market price, wait for price to pull back to this zone, and you go in with the remaining 50%. So if your daily risk is $50, you can risk $25 from this point. Okay, $25, and when price pulls back to this zone, you risk the remaining $25. Okay, you all know the reason why we analyze yen basket. It's to know the trend for the yen, to know if yen is bullish or bearish. That is the reason we analyze the yen basket. We don't execute trade on yen basket. We just use the yen basket to define the trend of yen. And by that, we are able to know which direction to follow on JPY pairs. I hope that is clear. We are able to know the direction to follow on a on JPY pairs. Okay. Mr. Raphael, if you're not seeing my screen, the challenge is from your hand. Please, others, can you see my screen? 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 If you're not seeing my screen, Mr. Raf, then you should fix the issue. It's from your hand. So if you have any question or any pair you want me to analyze, let me know in the comment section. So let's analyze dollar index. If you have any question or pair you want me to analyze, let me know in the comment section. All right, others can see my screen. So Mr. Raf, the issue is from your hand. Okay, so what do we have? Let's start with the daily on dollar. Dollar has been playing with my emotions, though I made some good profit trading it on Tuesday. Yesterday, trade it my SL, okay, which is fine. Losses are inevitable. Okay, losses are inevitable. You know, as a trader, for you to be a profitable trader, you must be comfortable. Losses are inevitable. Okay. If you're applying good risk and good risk reward on all the trade you execute, for example, if you're trading with risk reward of 1 to 2, you don't have to be worried about the losses. You don't have to be worried about the losses. If your risk reward is 1 to 2, out of 10 trades, you just need to win 5 trades and you'll be profitable out of 10 trades if you're trading with a good risk reward. Okay. All you need is just a 50% win rate. That is all you need to be a profitable trader, 50% win rate. If you have a strategy that has 60, 70%, 80% win rate, good. But the risk reward must make sense. If you have a winning rate of 70% and your risk reward is very poor, you will still be a losing trader. You will still be a losing trader. So what's happening on the daily time frame? So what do we have here? As you can see, price just filled this fair value gap. Okay, price just filled this fair value gap, and you can see how the market is reacting from that zone. You can see how the market is reacting from that zone. And also you can see we have support zone or support levels. You can see we have this resistance turn support. So you can see the fair value gap is in confluence with this. Can you see it? With this demand zone. or support zone. You can see. So this zone is a key zone. Is a key zone. So let's go down to now after the close of yesterday candle. Let's see the pattern we had. Yesterday was strongly bearish. Yesterday was strongly bearish. So let's go down to 4 hour. Let's see the pattern we had on 4 hour after the close. Okay, so yesterday candle, the last candle on 4 hour time frame closed bearish. It closed bearish. Now, you would agree with me that after the formation of this shooting star, sorry, this hammer, after the formation of this hammer, most retail traders would have executed buy, and their stop losses will be residing at the low of this candle. So I think what they've done this morning is to sweep the liquidity residing at this previous low. That is what I think they've done this morning. And you can see the previous 4 hour candle closed as a bullish candle. It closed as a bullish. Now, if you go down to 1 hour time frame, I'm sure you'll be able to identify a bullish reversal pattern on 1 hour. I'm sure on 1 hour. So you can see the bullish move started from this point on 1 hour time frame. You can see we had a candlestick pattern that looks like a spinning bottom. You can see this is where the move started from. Okay, so this is a bullish setup on 1 hour. Now you can see that a fair value gap was created here. Okay, so if you want to buy the dollar today, if you want to go bullish on the dollar today, I would advise you wait for price to pull back to this zone. You can see price has tested this zone. Price tested this zone, and there was a strong rejection from that zone. So most likely, G dollar index DXY is likely going to come and sweep the liquidity residing at this low before going bullish. That is my take on dollar for today's market. I am bullish on the dollar today. I am bullish on the dollar today. I'm bullish on the dollar today. If there's any pair you want me to analyze, please let me know in the comment section. Dollar is bullish today. Okay, so yen is bearish, dollar is bullish. So you should know what to look out for on currency pairs. So let's start with GBP USD. If we are bullish on DXY, we should look for sells on GBP USD. This buy that we experienced in the markets this morning, I believe it's because of the major news. I believe it's because of the major news. And I think what they did was to come sweep the liquidity residing at this previous high. The normal retail traders that have executed sell after the formation of this. I actually took a sell. Okay, I actually took a sell on GU after the formation of this candle. I took a sell on GBP USD. Now my stop loss is several pips above the high of this candle. I know they might want to come for the liquidity residing at this previous high. I know they might want to come for it, and that is the reason I had to set my stop loss several pips above this high. My stop loss is 20 pips above the high of this candle. My stop loss is 20 pips above the high of this candle. So I took my first trade on GU, and my second trade, I'll be executing my second trade. The market closes below this low. I'm going to execute my second trade when the market closes, or when a candle, 1 hour candle closes below this low. I'm going to take the second trade on GU, and my first target on GU will be this. This will be my first target on GU, and my second target will be this fair value gap. My plan is to hold the trade till the market closes. That is my plan for GU. I want to hold the trade till the market closes tomorrow. So it's either the market hits my TP, okay, or I close it in profits tomorrow before the market closes. Whatever profits I've been able to make by tomorrow, I'm going to close it before the close of the market. So I'm very bearish on GBP USD today. I hope that is clear. I hope that is clear. If you are yet to give the video a thumbs up, please do that now. Give the video a thumbs up. Give a thumbs up. And if it's your first time joining the stream, Please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay. So let's move on to the next pair, Euro USD. You should see a similar pattern on Euro USD. Okay. You can see GBP USD, Euro USD is also bearish. It is bearish. Let's start with the daily time frame. So they candle close strongly bullish, and the high of yesterday candle is an area of liquidity which has been swept this morning. Okay, so yesterday candle closed strongly bullish. After the close of yesterday candle, what pattern do we have on 4 hour? Let's see. Okay, so this was what we had on 4 hour yesterday. This was the last candle for yesterday market. Okay, this was the last candle. So you can see we had this resistance that was broken yesterday. You can see, right? Okay, so you can see we had this relative equal high. You can see which is an area of liquidity. And I think what they've done today is to sweep the liquidity residing at this relative equal high. Sweep the liquidity residing at this relative equal high. And I also think we have a fair value gap. Okay, I also think there was a fair value gap here that needed to fill. Let's see. Also, you can see that we had this resistance here, support and resistance, you can see. But let's go down to lower time frame. Let's see. There's a fair value gap at that point. You can see. Can you see that? Can you see the fair value gap? This could be the reasons for the retracement. Fair value gap. Can you see this fair value gap? Let's go back and see. You can see that could be the reason for the retracement. That could be the reason for the retracement. So if 1 hour candle closes below this low, we should expect more sales on Euro USD. And my target for Euro USD, I currently have a trade. I have a trade on Euro USD now. I'm selling Euro USD. I've taken my first trade on Euro USD. Okay, I've taken my first trade on Euro USD. My second trade will be executed when 1 hour candle closes below this low. My second trade will be executed. Okay, let's go down to 15 minutes. There should be a shift in market structure on a lower time frame. There should be a shift in market structure on a lower time frame. So you can see what we have here. We have this mitigation. Can you see this mitigation? This is mitigation. You can see if you apply, this is a trend line also. You can see if you apply your trend line, you can see this is a bearish trend line. This is a bearish trend line, and the market is respecting this trend line. So you have this mitigation and shift in market structure, or is it breakout structure as a called here? Can you see this? Okay, so after a shift in market structure, we expect price to pull back to a premium. What has happened here? What has happened here? Can you see it? Price has pulled back to premium. If you go down to lower time frame, there is a fair value gap here. Let me just show you. There is a fair value gap here. Price had to come and fill at the premium area. Let's go down to lower time frame. There's a fair value gap there. Let's just go down to 15 minutes. Okay, this is 15 minutes. Let's see. So we had this, there's a fair value gap here. This could be the reason for the retracement. We have a very tiny fair value gap here. Tiny. Can you see this? There's a fair value gap here, a very tiny one. That could be the reason for the retracement. You can see this fair value gap. There's a fair value gap there. You can see that. So that could be the reason. So price has pulled back to a premium area. If you apply your Fibonacci from this swing high to this swing low, you can see anything above 50 is premium. You can see price went retraced back to premium, fill the fair value gap, and you can see. So if you want to sell, okay, you know how to apply proper risk and money management. You can risk 50% of your daily drawdown from this point. The breakout from this low, you risk the remaining 50%. I hope that is clear. Okay. So that's it for Euro USD and GBP USD. I am bearish. I'm bearish. I'm waiting for 1 hour candle to close below this low so that I can take more trades on Euro USD. Okay, so someone is requesting for USD CHF. USD CHF is negatively correlated with USD CHF is negatively correlated with Euro USD. They have a strong negative correlation, very strong negative correlation. So let's start with the daily time frame. If there's any pair you want me to analyze, let me know in the comment section. Okay, so you can see if today's candle closes as an hammer, then you should be looking for buys. You should be looking for buys on USD CHF. If today's candle closes bullish, you should look, that would be a strong confirmation for buys. But let's go down to 4 hour. You are a day trader, you want to trade USD CHF today. You don't want to wait for the daily candle to close. So we need to go down to lower time frame. Let's see if we can identify a bearish reversal, a bullish reversal pattern. So you can see yesterday, this was the last candle for yesterday market. What happened? We had a doji here. Can you see that doji? We had this doji. What would have happened yesterday? Most retail traders, you can see, after the formation of this doji, most retail traders would have executed buy, and their stop losses will be residing at this low. That's where they will set their stop losses. Okay, most retail traders will set their stop losses at this low or a few pips below this low. Okay, and also those trading fair value gap. You can see we had this fair value gap here. Those who trade fair value gap will think, okay, price has filled this fair value gap, let me buy. Those who trade fair value gap, you can see. So price, so those who trade fair value gap, they would say price has pulled back to fill this fair value gap. It's time to buy. So most would have executed buy, and their stop losses will be residing at this low. And also we have this relative equal low here that most retail traders would have set their stop loss. So this could also be the reason. You can see. So they can fill this gap and also swap the liquidity residing at this previous low. And what pattern do we have on 1 hour now? You can see this is a bullish reversal pattern. This is a bullish reversal pattern. If you don't want to buy from the current market price now, go down to 1 hour or 15 minutes time frame. You can see 15 minutes we have support, resistance area has been created here. We have this resistance, okay, that has been created this morning. We also have this resistance. So if you don't want to buy from the current market price, I feel it's good time to buy now. You could patiently wait for 1 hour to close above this zone. Okay, so you could take your first trade from this point. If 1 hour candle breaks out from this zone, you take more trade. But you need to know how to calculate your lot size. It's very important. You don't just open trades anyhow. Okay, for every trade, there is a specific lot size you're supposed to apply on the trade. You don't just load your accounts, just opening trades. No, you need to calculate to know the lot size you would apply on the trade. If you don't know what lot size to apply on a trade, then you shouldn't be trading. You shouldn't be trading. Okay. So, for example, if your daily drawdown is $20, if your daily drawdown is $20, for every trade you execute, if you execute a trade on a pair, if you execute multiple trades, you would ensure that at the end of the day, if all the trade hits your stop loss, you will not lose more than the $20, which is your daily drawdown. Okay, you don't exceed your daily drawdown. You can open 10 trades, and those 10 trades should not exceed $20. You can even open 30 trades, but you would ensure that those trades, if they go against you, it does not exceed your daily maximum drawdown. To have a daily maximum drawdown, you need to have that in your trading plan. Okay, so that's my take on USD CHF, Mr. Raphael. Okay, look for buys, don't sell. Look for buys. Look for buys. So let me go to 4 hour. If you are buying, your first target should be this. Okay, this should be your first target. Your second target should be this high, this relative equal high. Your third target should be this. Okay, so those are the targets for USD CHF. If you want to buy, it should be your first target, second target, and your third target. Any question? Is there any other pair you want me to analyze? Let me know in the comment section. Give the video a thumbs up if you haven't done that. Okay, so let's look at gold and GBP JPY. Okay, I told you guys gold still is still bullish, but I'm still looking out for on gold before looking for buys. I'm not interested in buying gold right now. I'm hoping this is where I might want to risk buying gold. It should come sweep all these lows. Okay, that's my expectation on gold. If it plays out, fine. If it doesn't plays out, fine. Okay, if it doesn't plays out, fine. I'm expecting a strong bearish move on gold before looking for buys. Okay, so yesterday candle closed strongly bullish. It's been bullish for days, for weeks, for months. Gold has been bullish. Okay, so let's go down to 4 hour. Okay, 4 hour, the previous candle closed strongly bearish. It's closed strongly bearish. Let's see a value gap on a lower time frame. Let's see if it's created a fair value gap on a lower time frame. So you can see on this is 1 hour time frame. We have this fair value gap it's created here. There's a tiny fair value gap here. If price breaks out from that fair value gap, then you should be looking for sales on gold. If price breaks out from this fair value gap, okay, you should look for sales on gold. If price breaks out from this fair value gap, you should look for sales. Let's see 15 minutes. Okay, price breaks out from that fair value gap, you should look for sales. So you can see here we had this order block. We had this order block. I think that was what held price. You can see after price tested that favor, that's this order block. You can see a strong rejection from that order block. Okay, so this is a sell setup. This is what I see on gold for now. At the moment, this is a sell for gold. If you are selling, your first target should be this relative equal low. Your stop loss should be at this relative equal high. Your TP should be at this. This should be your first TP. So my bias on gold is bearish, 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 bearish. Any question? Any question? Any question? Any question? Okay, so let's look at GJ, which will be the last pair for today's session. If there are no questions, GJ will be the last. Mr. Light, happy birthday to you. Wishing you more glorious years in good health and prosperity. The Lord grant you every of your heart desires. Every of your expectations this year shall be met. Everything working together for your good this year. All things working together for your good. Your steps are ordered by the Lord and by the Holy Spirit. Your steps are ordered. Your life will be filled with joy, joy unspeakable, full of glory. So, GJ, what's happening on GJ? I think GJ is still bullish. Okay, GJ is still bullish. Some persons are saying it's going to sell, but I think it's still bullish. I made some good profits, over 100 pips on GJ. GJ has done me well this week. GJ has been good to me this week. GJ has been good to me this week. I think I took a buy from this point. I took a buy from this point. I made close to 100 pips, 100 pips on GJ. I took a buy around this area. Took a buy on, let me see the price I took that trade from. GJ 201. $201.95. 201.95. That was my entry. 201.95. And the markets. Okay, this was where I bought 201.95. This was where I took a trade on 201.95. And you can see the market is currently at 203.30. So I'm already out of this trade. So now, if you want to sell GJ, what am I seeing on GJ? This is what we have, this relative equal high. Okay, have they swept the relative equal high? They've not swept this relative equal high. There's a high probability they're going to sweep this relative equal high. So if you're considering selling, you can see what is forming right now. This candlestick might close as a shooting star. The plan is to get retail traders to start selling. So you need to ensure that this relative equal high is swept. If they don't sweep this relative equal high, I doubt if GJ will sell. I doubt if it will sell. So they want to set trap for retail traders so that they can start selling. Okay, so they're going to sweep this relative equal high, and most likely you can see this fair value gap here. You can see this fair value gap. There's a high probability they will fill this. This is where you should be looking for sales on GJ. This is where you should be looking for sales. If price does not get into this zone, I'm not going to sell. I'm not going to sell GJ. If price does not get into this zone, I'm not going to sell it. I'm not going to sell it. Let's apply our Fibonacci. Let's see where price is at the moment from this swing high to this swing low. Is price at a okay? Price is at okay. Price is just at equilibrium right now. Price is at equilibrium at the moment. Is at equilibrium. Okay, is at equilibrium. But I feel GJ would come fill this fair value gap before going bearish. Is there any other pair you want me to analyze? Let me know in the comment section. Is there any other pair you want me to analyze? Let me know in the comment section. I've always advised, if you're new to trading, just focus on major currency pairs. The 7 major currency pairs. Pick 1 or 2 pairs and focus on those pairs. GBP USD, Euro USD, NZD USD, Australian dollar USD, USD JPY, USD CAD, USD CHF. Those are the pairs you should trade as a beginner. Those are the pairs you should trade as a beginner. Just pick 1 or 2 of those major pairs and study those pairs. Study those pairs. The reason newbie traders lose money is because they want to trade all the pairs. Professional traders trade few pairs. They don't trade all pairs. Profitable traders don't trade all pairs. Pick 1 or 2 pairs. If it is gold you want to specialize on, focus on gold. But I do not recommend gold for new traders. Gold is just too volatile. And as a beginner trader, I don't think you have that mental stamina. The mental stamina, you don't have it yet to be able to trade gold. You don't have it. So if you don't want to stress yourself emotionally, don't trade gold as a beginner. Don't trade gold as a beginner. Most of you will not listen until you get your hand burnt. You will not listen until you get your hand burnt. Okay? Focus on the major currency pairs. Okay, that's my advice for you today. Let him that have ears, yeah. Let him that have ears, yeah. Okay, so that will be all for today's session. I appreciate you all for your participation. My greatest desire is to see every one of you succeed in your trading career. That is if you will not give up. If you will not give up, if you will not give up, if you give up, you fuck up. If you give up, you fuck up. You have to keep pushing, irrespective of the losses. Losses should make you better. Okay? Challenges should make you stronger. Okay? Face those challenges. Challenges will come, losses will come. It's inevitable. You have to be comfortable taking those losses. You have to. You have to. In this game, the best losers win in this game. The best losers win. You cannot do without losses. You cannot do without losses. Be comfortable taking losses. And these things takes time. It takes time. So you have to be patient. You have to be patient because where you're coming from, making losses or taking losses on a daily basis does not make sense. It doesn't make sense. You do a 9 to 5, at the end of the month, you get paid. There is a fixed income you receive at the end of the month. But in trading, it doesn't work that way. It doesn't work that way. You lose. Okay? You lose. All right, guys. Do have a wonderful day. For those of you in the VIP group, if you have any question, drop it in the group and it will be attended to. Bye for now.